Hey guys, this is an update to my video yesterday regarding the new proposal for stimulus money in addition to the CARES Act. I will also include an update on forbearance as there's some news in that front as well. Hey, I'm Mac with Albert Rogers Realty. I'm a real estate broker here at Castro Valley, California. If you're new to this channel or just stumbled on it, I regularly give real estate market updates as well as other financial market updates that may affect real estate. More so now that we have this pandemic as things are changing rapidly. If you want to be updated, click subscribe, like, and follow. Thanks. Anyway, on to my video yesterday. I mentioned that the PPP or the Payroll Protection Program and the EIDL or Economic Injury Disaster Loan was all used up and that there was a proposal to replenish it. Well, here's the good news. It just passed the US Senate and the House is expected to take it up later on this week. Under the new proposal, the Payroll Protection Program or PPP will receive $310 billion in new cash, while the EIDL will receive an additional $50 billion. The bill sets aside $60 billion of PPP funding exclusively for small and medium-sized community banks. The Senate bill also contains $25 billion for coronavirus testing and $75 billion for hospitals. So definitely good news in that front. Now on to forbearance. I also did a video on this when it first came out as well. And I gave an update on how some of the lenders were administering this program when it first started. Basically, the initial reports that I heard from some clients and people in the industry that was that their lender were granting forbearance for up to three months, 6 months, or 12 months. And then at the end of the period, all the past due payments were, whether that was 3, 6, or 12, the whole amount was due and payable. Well, that doesn't necessarily help if you were affected by COVID-19, right? Now, the issue is that the servicers, the company that you send your monthly mortgage payment, they still need to send money to the bondholder or investor holding your mortgage note, regardless of whether they receive payment or not. So if you don't pay for 12 months, they are still paying out 12 months to bondholders. So if you can imagine thousands of homeowners requesting for forbearance, obviously these servicers will run out of money, right away. The servicers have been requesting help from the government so that they can accommodate all the forbearance requests due to COVID-19 reasons. What that basically meant was they need money to pay bondholders, and this is also the reason why servicers were granting forbearance and then saying we need to get paid in full at the end of the period because they need liquidity. It's not that they did not want to help. Now, here's the good news. Aren't you just thankful that you clicked on this video? I'm just bringing you all good news today. All kidding aside, as of today, the FHFA, the Federal Housing Finance Agency, they are the ones overseeing Fannie Mae and Freddie Mac. They stepped in to help servicers who are collecting payments on loans that are backed by Fannie and Freddie Mae. Or Freddie Mac, not Freddie Mae. Now, the thing is, they are not actually providing liquidity or money to do this. If you want to read the full story, it's on the Housing Wire website. It goes on to more detail about how this whole thing should transpire. The gist is that basically FHFA told the servicers that they are only obligated to pay investors or bondholders up to 4 months for loans that are in forbearance. Now, what does that mean for Joe and Jane Smith, the consumer, right? Well, this means that now, under this new policy, servicers will not be required to pay the bondholders on the 5th month of missed payments for loans in forbearance. So theoretically, this change in policy should create better options than what is being currently offered by lenders and servicers, because on the 5th month, if you are still affected by COVID-19 and miss your payment again, the servicers are not on the hook to pay the bondholders. So hopefully, this starts helping out struggling homeowners affected by COVID-19. I would also remind you to please make sure you are talking to your lender and servicer and making sure you understand what it is that they are offering you if you go the forbearance route. If you have additional questions about mortgage forbearance, please call me or directly or comment below. If you have any questions or need help with figuring out what or how this coronavirus pandemic is affecting your home's value, again, same thing, please comment below or reach out to us. Have a great day and stay safe. Bye-bye.